You can see here that the V is starting to form. The average was headed upwards. It was printed in blue. That means that it's going up, and then as it was coming down, it was printed in yellow, and is now printing blue again, and the market is moving up above where it was when this last update occurred. So because of those conditions, you can see that the market should continue to move upward, forming that hiccup that I discuss in the chart quite often right here. So I'm not sure if you noticed, but the market came all the way back down to my break-even price, and maybe 1 pip below that, but we really didn't start or this position rather, didn't really start to become a losing position by any means. But if I had left my closed position order at that price, I would be out right now, and I would have no opportunity to be in the market if we are to rise again and sharply here, because I would not have been able to obtain a better price. So at this point, I'm going to look to cover the position again. The reason I did it there is we created a ceiling there at 904. Where the market has not moved higher than that in the last few attempts. So because of that, it may be a true resistance point, and I don't necessarily want to make this become a losing proposition, but the indications are still pretty strong in the upward direction, so I would like to be able to profit from it. That's why I'm not, or profit further from it. That's why I'm not taking the money that's on the table off the table just yet. But on the same token, things can change pretty drastically, and if I show you the rest of the day, the overwhelming trend of the day has been downward, and you can see that from the chart. So I don't necessarily want to take too much risk here, but I would like the opportunity to take more profit from the market than we have right now. So you can see the E-mini is having a hard time breaking that 904 number. So again, I feel like the market could very easily come back to my break-even price before it makes the run upward, but I'm not going to take the chances on this attempt. It's been quite some time now since the order was delivered. Okay, so now we're breaking that level. So I'm going to make sure we take something from the market, at least to cover the commissions and grow the box a little bit. But I'm really going to try to attempt to give this market as much room as it needs. It's getting close to the end of the day here. It's about it's 2:53 at the moment, so we have a good hour until the close. But I don't necessarily want to be opening positions after this, especially having a positive day. I don't want to take any more chances. So I'm going to try to allow this position to profit as greatly as it can, and that will probably be the end of my day. Okay, so having seen this, I'm going to make sure that we take more home from the market than I have locked in right here. But I still want to give the market room, so I was okay with going home at this level, and now I can ensure that I have $500 more. But I want to see how far we can let the market go before I'm forced to close this position. And just to bring you over here so you can see what I'm looking at. The short-term directional analysis is now full again for the first time in about 5 or 10 minutes, maybe 7. The directional analysis tool is reading up, and the moving averages are full, as well as the chart shows that it is just moving upward with phenomenal velocity. And if you check the momentum, the strength momentum indication, it's still full at this point. So I feel very comfortable about leaving my closed position order where it is, but on the same token, I have now I have more than double, more than what I've made for the day in this position. So I want to try to take as much home from this as possible. And as you can see, the market's running upwards, so I'm going to make sure that I'm moving my closed position order upward slightly to take more home. Join us for part 3.